the Australian market will continue to be a very important part of what pan-Asian funds do in Asia. I do think that it's fair to say that the other Asian markets have also come up to be important large markets, right? We are now seeing buyout deals happen in China. We're seeing buyout deals even happen in India and Southeast Asia, and of course in Korea and Japan. So Australia, I think in terms of absolute dollars, is relatively consistent over the years, albeit perhaps a little bit less in 2013. But as a percentage of all of Asia, it has come down. I think, to be honest, I think we actually think that's a good thing, right? Because again, if you think about a pan-Asian fund, you want them to pick the very best opportunities out of a large opportunity set. And so in the past, where most buyout deals done were practically all in Australia, now there's a much wider variety of buyout deals happen across all of Asia. So I actually think it's a good thing because it allows the GP to be more selective and to create a portfolio of buyout deals that is diversified. I think for the domestic Australian funds, the smaller, let's say mid-market buyout fund managers, it's probably also a good thing because there's now less competition from the big buyout guys who can do buyout deals other than in Australia. There is some downward pressure on fund sizes for the domestic private equity funds. And again, I think that's not necessarily a bad thing from an investor's perspective. There was a period in time where Australia was attracting a lot of investor appetite, both international investors as well as traditionally, of course, the domestic investors. We've seen the domestic LP community pull back a little bit out of this market. And we have seen, whilst we have seen some substitution from the international LPs coming into this market, it's not been one for one. So net, there's less money coming into Australia. I wouldn't actually say that they're pulling back altogether. I think there's a rebalancing. Within private equity, there's a rebalancing outside of Australia, so where indeed historically a significant proportion of their private equity exposure had been to Australian PE. What they are now doing is they're rebalancing that, less Australia, more international, and sometimes keeping the absolute dollar amount actually the same. We do see a number of super funds where they are indeed shrinking their overall alternatives portfolio, and indeed in Australia, but also internationally. So there's a bit of both, but I certainly wouldn't say that the Australian super funds are pulling out altogether. There clearly is still demand here in Australia for kind of a global private equity investment product. If I look kind of at our deal flow over a 5 to 10 year period, you see very consistent deal flow coming out of the Australian market, whereas other markets are more lumpy. So sometimes we have a lot of deals coming out of China, but other years it might be quite quiet there. Clearly we've had some really good success stories here, and again the GP community is very experienced. What I also would say is that the experience, not just the investing experience, but actually the experience of GPs working with LPs like ourselves as a co-investor is far greater in Australia than it is in China or even in Korea or Japan. So it's generally speaking a little easier for us working here with the GPs because they know how to run a co-investment process.